So welcome back. I early on recorded an interview with Thomas Book, the executive board member of Deutsche Börse, about, of course, the corona crisis and the challenges, but also what he thinks will lie ahead for exchange operators going forward. So I started our conversation by asking him about the main challenges posed from corona and also the lessons learned. So take a listen.
It was and continues to be, of course, an unprecedented crisis and also a real stress test to the industry. We are very happy. Our trading and clearing platforms were a pillar of stability. We kept markets open, even in difficult circumstances. But secondly, also we saw the importance of fair and transparent price discovery. There was a flight to quality. Volumes shifted back to exchanges, which is very important and highlighting our role. And lastly, of course, it has really accelerated trends that we have seen before, like electronification or sustainable investments. So it feels that all of this has been really crystallized by these sort of unseen conditions that we've never seen before. And I think we all are longing for more normal times. I can't wait to see my kids go back to school full time, hopefully soon.
If you compare the corona crisis to the financial crisis, what is the main difference, and perhaps why is this situation more challenging than before?
I think you can't compare it because corona was a real economy crisis and a shock. If you imagine that just a year ago, the DAX was at 8,500 points. Now it is at close to 14,500. So it was a shock with a quick recovery. The financial market crisis was much more profound. And I think it is good that in times of these record volatility levels that we have seen, we saw that all the financial infrastructures coped well. And indeed, we can also say intervention was not necessary, so there should be more trust in markets, so short selling bans, things like that, which we didn't have in Germany, were not necessary.
This time around
Exactly.
Yeah. There's a lot of change in the industry. How are you positioned and what are you doing to embrace that change?
Yeah, I must say, for me, it is the most transformational time that I have witnessed in the industry. And it is really a time where electronification has been greatly accelerated as a trend, but also investment trends such as sustainable investments have been greatly accelerated by the crisis that we've seen.
So you're saying that corona is actually an accelerator of trends which were there already and which are now more or less pushed on the industry?
Yeah, and it's exciting times. I think there are three fundamental drivers that we see at work. First of all, new investment themes. It is the shift from active to passive, which is very important, but also the shift to sustainable investments. Secondly, it is about regulation that shifts OTC volumes into central clearing and from OTC into exchange-traded markets. And of course, last but not least, it is about technology. We see a great trend into electronic, quant-driven execution in our markets. And I think we are well positioned as Deutsche Börse for these trends with our sort of cross-asset class coverage and also our deep margin and liquidity pools. And it's all framed by our key ambition, which is to be the venue of choice for the buy side.
Of course, ESG is one of these hot topics you've been just mentioning. You acquired ISS, but how important is ESG actually on the trading side?
I think it really pays into our core value proposition as an exchange, because investors are looking for sustainable investment opportunities and companies are looking for the funding to finance the transition into a new sustainable future. The exchanges are just in the middle of it. We are providing the investment tools and opportunities. And I'm really proud that Deutsche Börse is a leader. We not just focus on marketing, but on actual delivery. Eurex has become the largest venue in exchange-traded derivatives that are based on ESG indices. And Xetra has become the largest platform for ESG ETFs, a very fast-growing segment.
The acquisition of ISS was also a big moment for your company. How important is that for your positioning in the ESG arena?
We are really glad that ISS has joined the group. It's a great team, and of course it complements, it completes our value chain for ESG. ISS now delivers the data and rating component, also with the focus on governance data, so it's a very important part that adds to our trading and clearing capabilities that we have, and it underpins our strategic, of course, ambition and core direction, where ESG is a core pillar for the future of Deutsche Börse Group.
Electronification is changing a lot of businesses. So how is it changing your business, and what are your observations of major market trends in that respect?
I personally believe that electronification is a great driver of our future growth because it provides the scalability for our business. And I mean, obviously the pandemic was a great catalyst for the electronification, but there's also a second driver which is more underlying, and that is the hunt for data and quant-driven investments that is becoming very important in our industry. All of this is our core belief will be the future. That is also why we are continuing to expand in that sphere, not only with Axioma. Last year also Quantitative Brokers has joined the group, which is a company that is focused on intelligent execution algorithms. It also brings us closer to the buy side and pays into the strategy that I mentioned before of being the venue of choice for the buy side.
Do you see also an acceleration of electronification in markets like the bond markets, which was traditionally not so much electronified?
Yeah, we do see that because the bond markets obviously are quite fragmented due to the number of instruments. They have always been a bit lagging behind. But also now we see more and more volume shifting to electronic execution venues. For instance, our repo markets are a great example where we provide an electronic platform for the fixed income markets that continues to see strong growth coming from the voice brokered OTC world.
Another hot topic are cryptocurrencies. What are you doing in your product offering, and how do you judge the situation when it comes to crypto?
Yeah, and crypto indeed is of course dominating the headlines. It's one of the hot investment themes right now. And we are, of course, looking from our perspective as a regulated market, creating trusted markets. What can we contribute? We want to be an innovation leader. We are very happy. We have launched last year as the first exchange globally an ETN based on Bitcoin. And that is a vehicle that in the end not only allows retail investors, but also institutional investors to participate in that market without the need to set up a wallet or other structures. They can just buy like a normal ETF. This product. It has seen phenomenal growth over the past month, and we've just expanded the product range with Ethereum, and other products will follow. So it really pays into our ambition to provide innovative investment opportunities also for institutional investors.
Let me bring you to the macro level and regulation, because there's also, of course, a lot of change happening in Europe. And what needs to be done in Europe, especially if we talk about capital markets, to improve and make Europe more attractive?
Yeah, I think first and foremost it is to understand and recognize that capital markets are of strategic importance. They are so important to fund the transition and the transformation into a digitized, sustainable future. They are so important for the economic recovery after the crisis now, and they are really critical for the future innovation and growth in Europe. And we are really pleased that also now we see that the Commission is taking the stake of these issues and is focusing. Not only the Capital Markets Union Action Plan was published, and that now has to be quickly executed and implemented. There's also now a focus on the strategic relevance of capital markets and the autonomy of Europe, which we have seen in the communication of Commissioner McGuinness. So therefore, of course, we hope that there is a recognition of the importance, and I'm really convinced it is so important that Europe has stronger capital markets.
What is the influence of Brexit when it comes to the development of financial markets in Europe?
I think Brexit has sort of cast a spotlight on some of the weaknesses in Europe. We have a highly fragmented market structure, which is quite opaque. We are very dependent on foreign infrastructures in our markets, and large exposures, particularly in the euro currency, are held abroad, so in foreign countries. I think all of this has been sort of crystallized even further by Brexit. And therefore, I mean, it's understandable and welcome that the Commission now also puts a focus on fostering the use of EU market infrastructures. We are very proud. We have built the liquidity pool for the clearing of interest rate swaps in the EU. But that is also driven by our proposition to bring together futures, swaps, and repo. And of course, our ambition, we'll hear it here in the conference more often, of being the home of the euro yield curve as Eurex and offering these products in one clearinghouse.
So what's your personal view on Europe, especially in the light of what we have seen last year, which was clearly a push towards more European integration? Some politicians even have called it a Hamiltonian moment.
We want to be an active contributor. We have been part of the high-level forum that discussed the CMU actions. And of course, we want to be, as the private sector, contributing as a leading market infrastructure globally to build a strong underlying framework for also fostering the use of the euro in future. And of course, we will contribute our views on how we can build a stronger capital market for Europe.
Okay, thank you very much.
It was a pleasure.